Ripple XRP, so we have the Bank of England that are telling you this. I have a few updates from Ripple, also talking about the crypto energy efficiency as well. Just in general, we're going to be having a look at CBDCs in the US and which states are more open to this and where there is legislation. We also have a video in relation to MasterCard and what they're going to be bringing out with their biometric authentication. And I think it's pretty useful to understand how that will be changing soon. And of course, the price action for XRP coin today. So all I ask from you are two things, which is to smash that like button and of course to subscribe to the channel as well. So first things first, let's take a look at what the Bank of England have said. We have over here from XRP Daily that stablecoins are much more favored over cryptocurrencies, for example, like Bitcoin. Now, we all know that when it comes to a stablecoin, the reason as to why it is more favored is because it is pegged to that fiat currency. And so that can be pegged to the dollar, to the pound, or the euro. And the Bank of England actually have plans to be able to regulate that stablecoins that we're going to be having. And the reason as to why they like it as well is because you have that less volatility when it is pegged to that fiat currency. And so they are essentially saying that they want to be backing stablecoins with central bank deposits rather than with the commercial bank deposits. I mean, we all saw what happened with Circle with the stablecoin, as it actually lost its dollar peg value due to the fact that its reserves were based at Silicon Valley Bank. And what happened with that bank? Well, it collapsed. And so that is why they want the issuers to hold those deposits at the central bank rather than the commercial bank to avoid that volatility. Let's just take a look at this video.
We really haven't changed. I mean, look, can I by the way draw a distinction? I think it's important when we talk about crypto to just draw a distinction between two things. One is what I tend to call unbacked crypto, the Bitcoin variety. The other is stable coins. I think they're different animals in that sense. I'm afraid I continue to think that unbacked crypto is essentially has no intrinsic value. It may have value to people who want to own bits of it, but it doesn't have an intrinsic value, and it is a highly volatile investment. I think it should be regulated appropriately with that in mind, but I think we have to always get the message across. That is a highly volatile instrument to hold. Now, you may want to hold it, but please understand what you've got. And it's not money. It is not in any sense money. Stablecoins purport to be money. They purport to be used in payments. You'll have seen that we've put out, we've got legislation now in this country which sets out the regulatory framework for stablecoins, which is important. And we in the Bank of England for so-called systemic stablecoins, those that would be used more widely, will put in place the rules around that. Now, because they purport to be money, and because that is their intended use, they will have to be held to a higher standard. With unbacked crypto, it's not money. Nobody should, I think, be under any illusions. With stablecoins purporting to be money, they will have to maintain the standards of money. I think the public has a right to expect they hold their value, and so that's what we will be aiming for.
The only thing I was going to add to that, Andrew, was just some of the underlying technologies, particularly around distributed ledger technology, blockchain. They're obviously of interest. We're experimenting with them, just as a lot of other central banks are. The financial sector is doing a huge amount of experimentation to see if the use cases where they could be relevant.
That's the technology, not the crypto.
Yeah, but it's the technology that often gets emphasised as being why people are getting involved in them. So, but that's certainly why we're interested in their potential use cases.
I mean, in terms of the digital assets as well that we hold with cryptocurrency, I think that we all know by now what the risks are in terms of that, and we know what we are holding as well. We do a lot of our research, and so I'm more than sure that a lot of you that watch my videos know exactly what you are getting into, but I thought I'd just show you their view on the stable coins. So from Ripple, we have over here that over 70% of global finance leaders say their confidence in the crypto and blockchain industry increased in 2023. And we have this chart over here saying 76%. This will be as a means of driving innovation in their business in the next few years. I mean, we have seen big players such as JP Morgan increase their blockchain team by roughly around about 100 staff. So I think it's now bringing their overall team to 300. I mean, a lot of these companies and financial institutions are starting to learn more about blockchain, because I believe that their clients are asking for it and they're looking at alternative ways to make their investments instead of, for example, just holding the pound or holding the dollar. It would make more sense that they would be going into the digital asset space in order to diversify their portfolio. And I think that is why we are seeing more of that shift over there. Also, the utility and the benefits as well of holding digital assets. So Black Swan Capitalist says over here that crypto mining isn't the future of a self-sustainable monetary system, and that's what XRP does. I mean, there has been a lot of issues when people talk about Bitcoin because, of course, it uses a lot of energy. And Bitcoin is a means to an end. Invest in the future, not the past. If anything, Bitcoin leans more towards government centralization. I mean, we've seen more larger financial institutions now essentially taking over Bitcoin, really. So it's not like as if it is the people's coin anymore. But Bitcoin was created for that back in 2013 or around about that time. However, we are shifting now to other digital assets that are much better than Bitcoin. So we have over here, how much power does crypto use? The government wants to know. And nowadays we have so many different players that use a far less amount of energy when it comes to Bitcoin. And governments are becoming more increasingly aware when it comes to their energy efficiency as well. And they have raised their concerns, especially in the UK, in relation to Bitcoin's energy consumption. And so it's a way forward when it comes to digital assets to be looking at alternative ways. From Chad over here, we have the current scorecard on states banning the CBDCs. Let's take a look at this. Now, we're going to have different states that will be accepting this CBDC, or that others that won't be accepting the CBDC. So we have the wholesale CBDC, which are for your states and at the high level, and then the retail CBDC, which is for the citizens. So we've got the legislation proposal, which is marked in grey, and the legislation passed, which is in green. If we take a look at the green ones first, we have Alabama, which is a block state accepting CBDC, and then we have Florida and Indiana with the CBDC is not money, and the block state CBDC trial participation is Alabama. And the rest of them are pretty much all grayed out. I mean, do the states actually have enough power to be able to say, no, we don't want a CBDC? And so I'm not quite sure if it is up to the states. Maybe it is so far because we're only in the beginning stages. But if the Federal Reserve require each state to have a wholesale CBDC, then maybe we could potentially see one. I mean, Donald Trump has expressed his views with the fact that he will not be passing a CBDC. So if he does get elected, we'll have to see what happens, because he is very strong on that. From ISO 20022, we have MasterCard's Click To Pay. So this is their technology, the online transaction with biometric authentication. And this is pretty much similar. For example, when you unlock your phone, instead of typing in your passcode, you can actually use your fingerprint. So it's going to be the same thing with a card. So let's say, for example, when you go to a supermarket, you go to the checkout bit, you're going to not only tap your card, but you're going to have your thumb over the fingerprint sensor. And so what's going to happen is on that card, there's going to be some sort of digital image of your thumb, so it can actually recognize it. And if there is a match, then it will allow for that transaction to be approved. But if there isn't a match, then the transaction will fail. Now, I think it is pretty good, because that will only mean that it will deter a lot of people from using your card. I mean, nowadays we have the contactless card. So if anybody gets hold of your card, if you lose it, for example, let's say, then they can basically tap your card without the PIN number. I believe it might be up to £100 still. And it's not really good because you've obviously lost those funds. However, MasterCard have now implemented this security measure. Let's take a look at this.
File experience. If you think about how you pay for your Netflix or your Uber transactions, or when you register with a merchant to put your card on file, that means then when it comes to checking out in the future, it's a really slick experience and simple experience. But would you believe you've still got about a third of transactions when it comes to paying, people are typing their card details in. And when they do that, at that point, you're going to see errors. You're going to see errors in terms of actually the typing of the card numbers. People make mistakes, and there's fraud that goes with it as well. So we're really focused as an industry on deploying what we call Click To Pay. And with Click To Pay, this is really an opportunity for there to be an embedded experience where someone's card details are saved in a digital way, so that when it comes to checkout, the customer's card details are known, and there is an authentication process through biometrics, which means you're able to speedily check out.
Wonderful, and we'll talk more about the advantages of the embedded experience in a bit, but first I'm interested to hear also how the technology actually works.
Yes.
So give us some insights there.
So how it actually works is that from a consumer perspective, they'll sign up for a Click to Pay experience, and that sign up can be facilitated through their issuer. They might do it automatically, their issuer, or proactively through their app, or it can be at the point of checkout as well, where you create a profile and then going forward, intelligently, your card, your preferred way of paying, is shown at the point of checkout. You can switch it to something else if you wish to, but it's automatically shown there, and then you can click on that payment method, and your transaction is authenticated using biometrics, which we all talk about nowadays, especially as we use them for logging into your phone or into your payments app. It's a very natural part of the payment, but it means then by using biometrics, there's security in that transaction.
So I do wonder how early that they will be rolling this out, because right now in the UK we have the contactless payment cards, and so the new set of cards that we will be having, I mean with MasterCard, so any of the banks that are with them, I know Santander has a MasterCard debit card, I believe, so when they'll be rolling out there will be that fingerprint sensor. So XRP coin, we are currently trading at 0.5127. We are down by 1.84% on the one-day chart. For the volume, we're down by 40.28%, and we're trading at $594.8 million. So in the earlier hours in the morning for today, we were trading at 0.5139. We took a dip here to 0.5096. So we are at 51 cents. Now we've come down from yesterday. On the 7-day chart, we are down by 3.29%. Yesterday we were doing decently well. I mean, we were at 0.5249, so we were just up by 1 cent. Where I want XRP coin to go now is to 53 cents. It's roughly around about a 2-cent move from here. I mean, on the 1st of February, we did go below that 50-cent level. We've not really found much strong support over here, but let's see how we trade in the next couple of days. I mean, the overall volume is down by 24.99%, and we are only trading at $29.94 billion in the volume. It is a Sunday today, so volume is usually lower on this day, despite it being 24/7. That's just the way that it seems to go, and so we should perhaps be getting back up to 40 billion in the volume somewhat soon. Guys, if you want daily Ripple XRP coin news, subscribe to the channel and like the video as well.